Hello and welcome to the Bradstreet CPAs Tax Tip of the Week video series. You're receiving this today as a larger part of our email Tax Tip of the Week series that we send out every Wednesday morning at 9 a.m. This video was linked to a 4-part series, part 4 of year-end tax planning. And I want to take advantage today and talk about some of the things that were in that text of the email and see if we can't go a little more in depth. One of the biggest questions that I get is, Lance, where are taxes going in the future? And the truth be told, just like everyone else, I'm not 100% sure either. So wanted to talk about some of the things that we know are going to change in the future, some of the tax cuts and laws that are set to expire in 2012 and beyond. When we're looking at year-end tax planning for clients, we're always looking at it from the standpoint that we're looking at, of course, the tax year we're in, but also what are the effects beyond. And I've got a couple things today. One of them is on the individual payer side, and that is alternative minimum tax. And AMT, as it's commonly called, was put in place in 1969, and it was put in place so that Congress made sure wealthier taxpayers were paying their part, so to speak, as the language is commonly used. What has happened, though, over the years is that it was never properly adjusted for inflation, and it has affected more and more and more Americans. And each year, we hear about AMT this time of year because Congress always does an AMT patch. And last year, Congress did a patch, and what these patches are is they're raising the amount of income you can earn that is exempt under AMT, in that if you earn X number of dollars under this exemption, you don't have to worry about AMT. Well, last year they did their patch, and they did it for 2010 and 2011, so we have that exemption in place. Now in 2012, there is no exemption or patch put in place. So when we're looking at it in 2010, and I'm going to put a link in the video right here to go back to that tax tip of the week to take a look at it again. In 2010, without the patch, AMT was going to affect around 20 million additional Americans on top of their ordinary income tax. They would be paying this alternative minimum tax too. Now in that link that just showed up, you can go back and learn a little bit more about AMT. It's a very complex calculation. We could do a whole series of videos and still barely scratch the surface on that, but it's an interesting subject and it's something that everybody needs to be aware of. The other thing I wanted to talk about is, for the business tax filers out there, you've probably heard of Section 179 depreciation. And Section 179 means that in a year where you buy machinery and equipment through 179, you can deduct the qualifying equipment, that is machinery that qualifies for this deduction. You can deduct the expense of it all at once. Meaning that if you buy a $100,000 piece of equipment, you could potentially on your tax return take a $100,000 deduction. In 2011, we know that you can do this on machinery and equipment up to $500,000. So instead of stretching out the depreciation schedule over 5 or 7 or whatever years the life of that piece of machinery or equipment may be, you can take it on your tax return all at once. Now what's set to change or expire in the future is, in 2012, that $500,000 ceiling lowers down to $125,000 and then goes even further down in 2012 and beyond to $25,000. So when you're thinking about asset purchases, when you're thinking about expanding your business and you want tax deductions for that expansion, keep these things in the back of your mind. We really think they'll help you out. I'm also going to have a link in the video right now to link to a past tax tip of the week that talks more about the Section 179 deduction, as well as what are some of the qualifying equipment that are under that tax law. So as always, thank you for joining us. If you have any future questions or comments, we always would love to hear from you. Would love to address those questions. Please visit our website, www.bradstreetcpas.com, and to find our blog, it's bradstreetcpas.com/blog. Thank you. Bye.